Testing, testing, testing. Okay, let's get into. So here we are. Today for the low floats, see IVP is up here 76% with 64 million shares traded. Okay. IVP, and then we also have JXG up here. It's up 22%, which is definitely not impressive compared to a 64 million share trading volume in pre-market. But this one is only 20 cents. So let's look into IVP. Now we've been seeing IVP over the past couple of weeks make some moves. And this is Inspired Veterinary Partners. Inspired Veterinary Partners. Make sure I am unmuted. I am. So yeah, this one is it owns and operates veterinary hospitals in the United States, and the company specializes in small animal and or general practice hospital. Hospice care, basically animal, well, not hospice, but hospital care for animals, basically. The other one, I don't even know if it's going to be challenging this one, but JXG is a Chinese stock. We've seen this one before. Do moves. I don't see any catalyst for it, but be careful on this Chinese stock. It is a little bit higher price, but lower volume, so less of the eyes are on it. And I'm guessing it's because it's a Chinese stock. A lot of these Chinese stocks on TOS have been getting blocked immediately, so I wouldn't be surprised if this is one as well that cannot be traded. I really don't. Let me see if I can just put in 0 and then try to trade it and see if they blocked it. Right. So let me just buy. Can't do it. They had something like a indicator or something telling me that I can't trade this. They've been blocking pretty much every Chinese stock that comes up for the past couple of weeks. Anyway, over to IVP. Went on back down after that little move up. 22% or 22 cents, back down to 20 cents. We'll see if anything else comes up and challenges IVP. Other than that, on the high floats, we have Nvidia leading the day with 1 million shares on the board. So just kind of the scans are filling themselves out right now. Let's jump over here and look at what's going on in the news. Apple's successor to CEO Cook has big shoes to fill. Apple is on the main line. I don't see it up here on, let me see how much volume it has. Yeah. Nope, it does not have a lot of volume at all. Not going to push that. I'm gonna let it here. Alibaba pops as its rival to ChatGPT makes strong debut. Alibaba has a ChatGPT rival. Okay. It has a little bit more volume. Morgan Stanley U.S. stocks likely nearing end to pullback. Novo falls as Alzheimer's drug trial fails to meet main goal. Bitcoin funds head for worst month is 3.5 billion pulled. Big tech AI debt wave is threatening to swamp credit markets. Retail earnings and data highlight holiday short. Retail earnings data highlight holiday shortened week. Rents are falling in U.S. cities. It isn't helping the home sales market. Double line wary of AI funding wave that could alter U.S. high grade debt market. Week of bruising volatility test support levels across stocks. Oil dips as prospects for Ukraine peace deal dominate. European defense stocks drop to near 2-month low as rally ebbs. Gold steadies as market weighs chance of another Fed rate cut. So let's jump down here and see what they're talking about.
Why is data that's coming out now so important for your mortgage rate? Well, the current 30-year rate stands at 6.26%. That's according to Freddie Mac. Now, historically, if we expect the Fed to cut rates, then the chances are that your mortgage rate will also start to fall too. But as a result of the government shutdown, data's playing catch up. Though that stream of data, that crucial data, is starting to pick up. Number one, inflation. Producer price index data is due. Now, the Fed has a mandate to keep prices steady, so this is really important in terms of what they'll do with interest rates. So if that number comes in lower than expected, then expect the chances of a Fed rate cut to increase and so your mortgage rate to come down. Number two, we're talking about retail sales numbers. Now that's a really good gauge of consumer confidence. But again, if that number comes in lower than expected, that increases the chance of a Fed rate cut, and then that also increases the chance of your mortgage rate coming down as well. And number three, consumer confidence. And you've guessed it, if that number comes in lower than expected, that increases the chance of a Fed rate cut and also reduces the cost of your mortgage. So we're going to have to keep a really close eye on this data to see if we get some good news for your mortgage rate.
U.S. stocks are in rally mode once again, but the nation with the world's biggest stocks like Nvidia, Apple, Tesla is getting trounced by countries around the world with much smaller markets. And on today's Stocks in Translation, we're going to take a look at some of the best performing countries in the world and importantly, see if they're still a good buy or if it's simply too late to jump into international waters. Now, it's a remarkable story, especially considering the new tariff regime that was unexpectedly thrust on the world earlier this year. And we recently talked to editor-in-chief of Investopedia, Caleb Silver, about some of the amazing gains around the world. Here's what he had to say.
What's crazy is that these markets have been strong all year despite tariffs.
Yeah.
Now, China is also outperforming the U.S. despite all the threats of tariffs. But even if you look at countries like Poland and Greece, they are trouncing the United States. Not big stock markets, not very liquid, and don't really hold a lot of growth stocks, but they've sort of been immune to a lot of the political and trade and tariff noise that's been out there.
Now let's take a look at the US and some of the big winners around the world. This is the heat map of country ETFs, and it's just a sampling. All returns are year to date. In the bottom right here, we have SPY, SPY. That tracks the S&P 500, which represents the US. And it was not hard to find 20 countries which are handily beating the US. You can see in the upper left, that's Korea. It is heavily levered to the tech trade and chip stocks, so not surprising to see it's winning out here. And check out number 2, it is Greece, up 65%, rising from the ashes of the global financial crisis. And Greek is not even a story about AI or tech, it's about fiscal discipline. And we don't have time to dig into each one of these, but just to let you know who else is on the top row here, EWP is Spain, then EPOL is Poland, both of those up over 60%. Then there's Peru, Vietnam, and Austria to round out that top row. But investors want to know, have these foreign markets gone too far, too fast? Is it too late to jump in? We asked Caleb that very question. Here's what he said.
It is very rare, though, to see international markets outperform the U.S. for an extended period of time. It's very much a U.S. stock market around the world. No, not being nationalistic here, it's just the biggest market and the most liquid in the world. So this is very rare, and it doesn't last forever. I wouldn't say it's too late, but I wouldn't go all in or even load up half of the boat with international stocks at this point.
So if you're sitting on some nice gains, you might want to lock
All
in some
right,
profits.
so wait. We got one popping up here on our low floats. A-ton just popped in with 5 million shares traded. A-ton. So let me go and do our due diligence on that. So 8. Go to A-ton. A-ton, I'm seeing a catalyst. A-ton Capital moves to buy 51% stake in Forbes to build AI-resistant Web3 powered media brand. Is its one of its catalysts. The other one is Alpha Ton Capital submits strategic offer to acquire majority stake in Forbes Media Holdings. So, let's go look at this profile. A-ton. Okay, so their profile says Alpha Ton Capital Corp operates as a digital asset treasury company. It focuses on building and managing a strategic reserve of the open network tokens, TON, T-O-N, and developing the Telegram ecosystem. The company provides public market investors with institutional grade exposure to TON ecosystem. Okay, so first of all, this is from the British Virgin Islands. It changed its name in 2025. I don't see how long it's open, but it did a name change in September 2025. Let's go look at this crypto that they are tying themselves to. So TON. Okay, so here is our crypto that they're talking about. Trading view, let me make sure y'all looking at the right thing. Yep, this is TON. And I don't know how confident I am in that chart. This is the monthly chart. It was at $1.85, came all the way down to $1.48. It's the only TON, yeah. It's TON USD, USDC, and then a perpetual contract. Okay, so yeah, we're on the right one. So this is the token that they are trying to dump into, getting 51% stake, but I'm just not impressed with the actual crypto. It's only been open for, this is 1 month actually. So not sure how that's going to play out with everything else, but yeah, not super impressive. So that is the crypto that it is connected to. Now we've seen big crypto moves for sure. But you really want to go and check out though the crypto to see if you're going to get spaded or not. Good morning. Good morning. AJ is in the house. We saw a ton pop up real quick, 51% with 6 million shares traded. We just went and checked out this crypto that is tied to, and it's not looking the greatest. Only 1 month of trading, it has fallen from 183 down here to 144 with a little bit like a 4-cent bounce off the bottom. They're trying to get 51% stake in this one. Let me go and actually look into what Ton is and what their project is trying to do. Let's see, tell me about Ton. Okay, it began in 2018 as Telegram Open Network. Okay. The layer 1 proof of stake. Pretty much staking. But what is it actually doing for the world? Other than Telegram development. I don't see much of anything though. So using crypto with Telegram is its main focus. Yeah, and that's what we've been seeing these past couple of weeks rolling up to Thanksgiving. A lot of these stocks there's been no catalyst that's been like, oh my goodness, this is it. It's been catalysts that have been shaky. And of course, like we see a lot of times during the day, we have to take note of all these wicks of indecision in here. So it had a big wick from 375 wick back down to 337. We see wicks all the way on this ride up, right? Not a really clean beginning of this motion. And one of those things that could mean is that, let's say when they drop catalysts, the bots get to it first, the computers and all of that get to it first. But if more computers are selling than buying, you see this not so clean move in the beginning. And even if retail is in here, they're just getting swapped up. They're getting into a chop factory. So, you know, they can jump in there if you want to. You probably make some money if you're really quick, but you know, it doesn't make sense when you go and actually do your due diligence and kind of read up on it. So now it's back to $4 flat. It hit a top up here of 474. Here are the low floats that we have on the day. So we had IVP sucking up all of the volume, 74 million shares traded. And look at these two in comparison. This one is a ton, only 7 million. And then JXG only 2 million. So if all the focus is on IVP, why is that? Because if A-Ton was so good, IVP would probably just dry up. It would be like, uh-oh, there's something real here. But, you know, and why wasn't A-Ton at the front of the list if it was so good? You know what I mean? It would have been up before. It's a higher price and all of that. Would have been up before IVP. But anyway, yeah, it is sinking on A-Ton is sinking all down. So we'll watch that go on down back under the 4s. Only up 34% with that. Not looking great. So far, it has been since the 17th since I've taken a trade. So today is the 24th. So 1, 2, 3, 4, like a week and a day. A week and a day. I've taken a trade. So I'm still sitting up green on the month though. Like my first 2 weeks I got green, and then, you know, waiting for something good to show up. So just haven't taken any trades, sitting in the green. Anyway, let's go ahead and continue with our news. I just saw them pop up and wanted to call it out and kind of look through what it had going on. And let me see the float before I completely turn away from it and see if that's why people are jumping on it. The statistics. And looks like the float is 1.76 million. So that could be a reason that people are trying to jump on it. Another one just popped in, CJET, CJET. CJET up 21%, $2.28. So look at that one. CJET. The catalyst for this one is ChiJet Motor Company enters strategic partnership with Edge AI Frontier Technology Limited to acquire up to 1 billion in Edge AI tokens at a 20% discount. Okay. And that's all I see. That's all the news that I see there. But this is what I'm looking at now. So CJET catching up with JXG really quickly. Is CJET a Chinese stock? TOS, Thinkorswim has been blocking Chinese stocks for real. They're not playing with their money. Okay, yep. This one, CJET, ChiJet Motor, is out of the People's Republic of China. So we're seeing Chinese stocks. Let me mark these so I can remember which one Chinese stocks. So mark this, People's Republic, China. And it is trying to buy 1 billion in Edge tokens. Now the problem is I don't know if that 1 billion is USD or if it's Chinese yen or what currency that they're actually doing that buy-in. The float is under 1 million, so okay, that one's marked so I can just remember which one of these is Chinese. But that is CJET right there. And the other one was JXG, was also Chinese. People's Republic. China. And its float. JXG. AJ called out GDOT. So look at that. He died, so this one's on. Yeah, but it's a trap. All right, let's go look at GDOT. GDOT is it says GDOT Corporation announces strategic transition with Smith Ventures and Commerce One Financial. So let's see, we got Green Dot Ventures, press release of cash. Is this a cash? What is this? Will be exchanged. Green Dot Smith Ventures to acquire and privatize Green Dot Corp's non-bank assets. Okay. Green Dot. What is Green Dot? Green Dot strikes acquisition agreement that will create new public bank and spin off its fintech business. Okay, let me go and look at this Green Dot real. EGD. Okay, and it is up 11. Yeah, it's got to get that volume. If it can get that volume, it might be okay. But it's got to compete. The problem is the more time these little curses have to move, the more volume they suck up, and people they kind of get tunnel vision on them. So it's like it's got to compete. And let me see how much it has in total. GDOT has about 5,000 shares traded. So yeah, it's a higher float. And it's a higher float. So it's definitely not going to compete with these during pre-market. It may do something during the day though, but right now, let me go. It's got a higher float. Let me see how high that float is. The float is 41.0 million. So all of the ones that are up moving now are below well, I didn't check. Let me check all of them. IVP, let me make sure all of them are below a million. I believe they are. This one, IVP float is 3.75 million, right? And the reason that we look for low floats is because the lower the supply in the market, the more powerful the moves are with volume, right? You get a lot of fat finger mistakes. You get a lot of big pumps, huge wicks and things. It's a lot of opportunity with that low amount of supply. And so that's why we look for the low floats. With higher floats, I pretty much focus on those in intraday because I want to see them hold levels. I want to see them tell me a story with their structure. CJET jumped up. Let me look back over there. CJET over there jumping up. Okay, so yeah, it's got 2 million shares traded. It's still kind of competing with a ton for volume. CJET looks like it might be catching up to it, but got a lot of work to do. It got up to a high of 320, and this is a Chinese stock, so I'll be very careful on that. Especially if Chinese stocks start leading on the day. Where was I though? I was on IVP, and so that one had a 3 whatever float. This needs to and CJET, if you look, you can see those wicks out here. Wicking. I had a clean move up. JXG, another Chinese stock. So, yeah. Be a weird Monday morning out here. IVP needs to fall on down for these other ones to kind of take control on the day. CJET 264. Popping up there. Is it going to do another wick? We've seen it wick with no real clean moves. Let's see. 70s. 3 million shares traded. Start just holding this down. Fade. People read up on it. A ton. Okay. So I'm gonna go back over to the news. I'm gonna keep an eye on these, but go back over to the news because these are just Chinese stocks and things with really weak catalysts. So I'll keep an eye, but we're gonna jump back over to the news here to go through that while we got time.
Depending on how much exposure you've got. And if it's a small amount, then maybe you just let the investments ride. But if you're thinking about jumping in, you probably don't want to make these a huge part of your portfolio. And it's also helpful to look at how this basket of country ETFs has performed recently. So in the fourth quarter, since October 1st, here we see a different picture. Chile, or ECH, tops the list, up about 14%. And then there's Korea again in the number 2 slot, up 11%. Brazil is in third place at 6 to 7%. Then Spain, Poland, and Hong Kong are each up about 2% or less. The biggest loser in the fourth quarter is China. It is down by 7%, followed by Germany and then the Netherlands. And you might be thinking, wow, there are really a lot of tickers here and choices. So where do I begin? Caleb feels you, so let's listen to what he had to say.
But you don't have to go out and look at the map and go put pins in them and try to pick them individually. Buy the MSCI All World Index. Make it a part of your portfolio.
So picking individual countries can be difficult, maybe as difficult as picking stocks. So that's why he's recommending a much broader approach. And here are a few options right here. You can invest in an ETF that tracks the entire world ex-US, which includes no US stocks. That's what ACWX is showing right here, up about 25%. You're not getting the eye-watering returns of South Korea, but you do have a little bit less volatility. And if you're only interested in developed countries or emerging markets, you've got some options there too. SPDW, that contains all the stocks in the developed world except the US. And EEM is one of the oldest emerging market ETFs. But be careful, as it's weighted very heavily to China, as are many emerging market ETFs. So if you don't want China, but you do want EM, you can go with EMXC for that route. Now, all of these options happen to be up over 25%, which is still double the US. Now, finally, here is a checklist of things that you might want to consider before jumping in or even just kind of reviewing your trades. Number one, do tariff headlines still get ignored? That's a big one. Then, are US mega caps regaining momentum? And then, are you overloading one country or theme? And finally, how's the US dollar doing? Is it weak or is it getting stronger? Tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
You know, Diane, one argument I've heard, and I'm curious to get your response to this, you'll hear this argument. They should cut, folks will say, because the labor market needs it, the housing market needs it, low-income consumers need it, and you know what? If inflation got away from them, they could always take that cut back. What do you say to that?
Well, first of all, I've heard the argument a long time about the idea that a cut would help inequality. That is just not how federal funds rate works. The short-term interest rate cuts, the percent of that on a subprime loan, which is about 25% of borrowers have subprime debt right now, those loan rates are so high that the marginal cuts you get from the Fed, they accrue more to wealthy households in terms of how they affect the equity market, and wealthier households who have lower rates. And so they have made a larger share of their payments rather than a subprime payment. So it doesn't deal with those issues. And in terms of the labor market, I am worried. But what I don't know for sure, and this is what the Federal Reserve is looking at too, is how much of the labor market weakness is due to structural factors like curbs on immigration, the supply of workers being constrained, or on AI, different kinds of factors out there that they have no effect on by just reducing the interest rate alone. At the same time, they do know more fiscal stimulus is coming. So this is a very difficult time when the Fed, instead of just a dual mandate of full employment and price stability, they have what we call a dueling mandate, where prices are edging up. At the same time, unemployment is edging up as well.
One question being asked, Diane, is should the Fed change the date of that meeting next month, adjust it so that they can have the data they need before making that decision? What do you think?
I don't think that they can change the date. It's very hard to change the dates of these meetings, and so that's a real problem. If they wanted to, and they got something that was startling on December 16th, they could always have an emergency meeting and do an emergency cut. So it's not as if all of a sudden we got absolutely horrible data on December 16th, that the Fed would have to necessarily wait till their next meeting in January. They could always turn around and do an intermeeting cut if they really thought it was warranted, and they're really worried about something that was, say, a larger meltdown in the broader stock market and credit market in particular. What the Fed intervenes on is when things become disorderly and threaten to have a much larger scarring effect on the economy. And so I think that's important to remember, that if something were to surprise us totally on the downside and really be awful before the end of the year, the Fed always has that ability to call its own intermeeting cut.
I thought your comments, Rich, on the dollar were interesting, where you call for a structural decline in the U.S. dollar next year. How come, Rich? Why does the dollar weaken even as the economy stays resilient?
Well, I think this is the bit. I mean, if you look in FX markets, it's all about the dollar smile. You need dollar exceptionalism, or you need the world really falling off a cliff to get you into that strong dollar. Once you're in the middle zone of, whether it's decent growth, whether it's resiliency overall, whether it's relative stability, that tends to be a market that's just engineered for a bit of a lower dollar. So I think that's one side of things. I think that is the area overall growth, overall risk sentiment, where we're probably on average going to be setting across the year. I think the other side, while I do think the Fed can continue easing, I think the conversation over the next year for the ECB, for the Bank of Canada, for the Reserve Bank of Australia, a number of other central banks is going to be, when's the time to start hiking? They delivered a significant amount of easing over the course of this year while the Fed was patient. They can sit there on pause. They can sit there and start to think about when hikes can come later on next year. And it might only be the ECB, but I think that conversation will be on one side. That leaves interest rates outside the world pushing a little bit higher, a bit more supported, and it leaves interest rates in the US going down. So it gives you interest rate differentials that are giving you a weaker dollar overall. We do push back. I think there's this question of dollar debasement and de-dollarization. I think that's probably overhyped a bit. What we're actually seeing is a very structural change in hedging markets in terms of what's going on and how people are hedging the downside. So I think there's a lot less selling of US assets than people let on. I think at the margin where they have to buy new assets, they're certainly skewing away from dollars that they might have bought in the past into other areas. But I think overall, they tend to be holding on to assets, but hedging some of the risk. And as the Fed cuts interest rates, the costs of hedging goes down and you can get more hedging coming in. And that in itself can support a weaker dollar as well.
Yeah, I was really blown away by what NVIDIA's CEO Jensen Huang was talking about in the earnings call yesterday. It reminded me how embedded AI is becoming in our society, even in the early stages. Is the reality that as AI becomes more just prevalent in our economy, that we are just done getting big blowout jobs day reports?
I don't know that we're done getting big blowout jobs report. I think one of the key factors here is that the foundations for growth are narrow pillars, three narrow pillars. Affluent consumers on the one hand, the AI investment boom that you just discussed, and asset price appreciation that are all tied with this optimism around AI. The other part of the picture is what's happening to labor supply. We've had a massive negative shock when it comes to labor supply due to immigration restraints, and that has meant that the break-even jobs rate, essentially the rate at which we don't see an increase in the unemployment rate, has fallen to somewhere between 0 and 50. That's really the fundamental factors that's going to push these job growth figures towards a lower end. But if you look at AI, I think one of the potential impacts that it has beyond just the short-term capital investment that we're seeing is essentially lifting the US economy's potential growth rate over the next few years. This is not a October or November story. It's really over the next few years that we're seeing this potential for greater capacity, greater productivity to enhance the US economy's growth potential. And that means that over the next few years, we could actually start to see more job growth in sectors that are dependent on AI. But for sure, sectors where there are potential for replacements of certain workers, that's where you're going to see structural downward pressure on job growth in those sectors.
Well, and that's exactly the thing that Saz talked to Hayden Brown about. She's the CEO of Upwork, which is a jobs platform. This is what she had to say about how AI is changing the game.
There are places where AI is creating new opportunities, and we're also seeing categories of work that people have said are going to be decimated, like admin assistants or lawyers. Those are also growing on our platform. And so I think the headlines are bleak around AI destroying jobs or around just the market overall being tough. But in the contingent economy, we're seeing a lot of strength. And I think companies are really moving from a more fixed and full-time employment model to something that taps into the flexibility and skills of contract workers.
Brian, I'm curious how you're thinking about the whole AI work equation here, because, okay, so it's more contingent workers. Not everybody wants to be a contingent worker. A lot of people like full-time jobs.
That's right. Yes, we do. I mean, I know I really like it. You get more certainty as far as with your payrolls, but I think a keyword that she used there, decimated, right? But what does that actually mean? Cutting by 10% technically, right? So if you think about, you are going to have some sort of reduction in certain traditional areas. You're going to have all sorts of new jobs being created. When we look at the U.S. economy overall, in the late 1800s, you know, more than 90% of the workforce was in agriculture, and now it's like, what, 2%? So lots of different changes. This one just might happen a lot faster. But if we think back to even, we don't have to go back to the late 1800s, just go back to the early 2000s, where we had strong GDP growth, but actually negative payrolls growth. A lot of that variety of factors, demographic shifts, technological changes. But in terms of the changes to the economy to think over the longer term, I think that it is really about what are the new jobs and new opportunities that are going to be created. I tend to be a little bit more of an optimist in that regard. I like to think of it as being a realist, not necessarily being too optimistic. But really for investors, I think that we don't have to worry so much about, are we going to have blowout jobs numbers or not? It's really about the earnings numbers, right? I mean, fundamentally, that's what investors are looking at. And does this really create the environment where the ones who adopt AI but are able to demonstrate that return on that investment, they're the ones who are going to benefit. And it can be in any sector. It's not just in chips or semiconductors or technology. It's across all the sectors.
Yeah, that was kind of the story of my life. Coming out of school, and I didn't come out, and well, I came out during, like, right before COVID anyway. But I was already doing contract work, doing network engineering. And so I really just didn't jump into a full-time job. I was doing contract work. I was working with all kinds of clients. And so I actually got a full-time job while doing contract work. And so now it's like I kind of mix and match. So, you know, I have the steadiness of the full-time, but I can also jump around and have multiple clients and things like that. So yeah, it was definitely a different. And I guess the other thing, I guess I had a lot of things lined up that wasn't expecting COVID coming out of school that got cut. So, you know, I was like, you know what? It is what it is. COVID want to come out here and slap us up and put my mask on, put my bull horns on and run it up. So start doing all kinds of stuff, wearing all kinds of hats. And the more experience I got, the longer my resume is stupid. But you know, the more experience I got, the more it was like, oh, you've done this, you've done this, you've done this. What haven't you done? I've done everything that your company does. That's what I've done. I've done it all on my own. So, you know, I can help you out, and get it, run up that bag. All right, so looking back over here, we see CJET took a little bit of a little dip there. They're starting to form a new idea. What's wrong? AJ says, I've got shorts on IONQ, QBTS, which I think that's one of the quantums, and RGTI. Most expire in February. Oh, you got options of expire February 2026, and I'm up big on them right now. I bet you are, because quantum in those chips went crazy. I've also got shorts on Bitcoin via a long call on BITI. BITI. What is BITI? Oh, it's been moving up. Down there, 18 bucks. Is that a dividend stock? Kind of looks like one. Let's see. Dividend. But I don't actually know. If it's this technology, it may not be a see BITI. Pro shares, Bitcoin. Oh, short Bitcoin. Oh yeah. Yeah, I don't know how long this little short's gonna last, but Bitcoin is almost like a SPY now. It's gonna have its ebbs and flows, but I think it can go higher over time. So, but for the short term, with that fall off, I know you got paid for sure. Back over here to the still as choppy as ever. CJET running into my little activate, move this over here. Look at China. I had one idea through here, so something there. From down here, 189 is right there, steep everywhere. It's kind of hard to put on what that wants to do. A ton with 11 million shares traded at a top up here, but no clean moves as of yet. This has been walking down the line. We did go over and look at a ton, the stock, or not the stock, the crypto coin that it is trying to connect to. They're trying to get 51% stake in TON, the Telegram Open Network. So, I mean, if you're really into Telegram, you know a lot about Telegram and maybe its possibilities, maybe that would be a play, but Telegram, I don't use it. I've seen people use it and I've seen people have like groups on it and stuff like that, but I never just been a hardcore Telegram user. Why is Bitcoin going to keep going up? It does nothing and you can't use it. I don't get it. So think about Bitcoin like the SPY, right? It is one of the grandfathers of crypto. And so Bitcoin, the ideas of Bitcoin and you can use it. You can use Bitcoin on terminals. You can use Bitcoin in PayPal. You can use Bitcoin in certain stores. So I don't know where that's coming from, but you definitely can use Bitcoin for cash advances, for all kinds of stuff you can use Bitcoin for. So I don't know. Its use case is pretty broad because it's like where all these crypto ideas started. So when it comes to moving, it may not have the fastest protocols, but because Bitcoin has been doing what's called forking into Bitcoin Cash, forking into other Bitcoin derivatives, all these derivatives and new ideas continue to strengthen the entire chain. So since it's like a grandfather chain, it has probably the most forks ever. You know, everybody wanted to get a part of Bitcoin, and then people were like, well, we'll just create our own coins. They created these coins, but these coins are building on the ideas that Bitcoin started, right? And Bitcoin can actually still implement if they do a fork. But yeah, it's definitely got plenty of use cases. Now, if I see PayPal get rid of Bitcoin, then I know it's probably going down. If I see Cash App get rid of Bitcoin, a lot of these ETFs holding Bitcoin. Like it's a reason that why people are into it. Anyway, a ton still chopping around there. CJET fell under there, so this is a new idea down here. We'll see how this ends up holding up. These Chinese stocks, man, we gotta get rid of them. Got to get rid of these Chinese stocks, man. Ton as a bottom and double down here, or not really a double bottom, 365-ish. And it is also is it a Chinese stock? This is why I need to take notes, man. This is why note taking is so important in trading. Because you will forget. Your eyes and your brain will malfunction. All right, 8-ton profile. This is out of the British Virginian Islands. Virgin Islands. I said Virginian. Virgin Islands. All right, and then hold on, this one was 1.76 million. Right, coming on back down there. So British Virgin Islands with a little bit low float. CJET just pumped to the moon there. So we got another outlier. So it actually ended up holding up this secondary idea, breaking through back through this level here of the 256 and creating a new high. It is up 52%, 6 million shares traded. If it keeps moving like this, it's going to suck up the volume from a ton. And it's going to end up sucking up the volume on the day. But I can't really place a top here because it's just getting started. The point of control down here is 263. On the 5 minute, it's 230 and 230. So we can probably draw our, well, 230 is kind of down there. I would like for it to close this 5 minute candle and show us where it's going to go. We can see the majority, just this blue streak here, the majority was traded between 262 and 247. So 260 and 250 is the majority. It's got two little ideas down here that I'm not sure which one of these is going to hold up, if either one is going to hold up. That's quite a bit of a clean move up there, but we'll see how it ends up playing out here. Did it get new news or something? Nope, same news. It's a little move up. The top of this one shot up to $3 flat, 3 flat, and then the next level is 320s. Let me jump over to the daily chart. On the daily chart, it is, oh my goodness, I've seen this one before. I got all kinds of things going on in here. Okay. Woo. Let me delete some of this. Okay, well, never mind then. Zoom in. So closed at 190 and now it's trading up to $3 flat. Let's see if we can break down this 282 and can we make this new high a new idea for a downtrend if it breaks down. Okay. Slight breakdown. Slight breakdown. Yep. So it broke that. Let's go ahead and make that new idea, new downtrend. Whoop. Okay, so we got a new idea here. Now I'm going to get rid of this old one. Got all the way down here to the 240s at this point. See how it continues to walk. 4 million shares, and it will have more volume than A-Ton. A-Ton under 20% now, 17%, working its way on down, right on that trend. Nvidia making it to 2 million, almost 2 million shares traded. About to jump back over to the news. This one continues to make its way back down. Top side, we need to break that $3 flat, really. All right, let's jump back over here. Not seeing any new news pop in yet. Down to that first idea, the idea inside of idea. So we kind of saw uptrend, and it came and reclaimed this other uptrend here. So that's kind of like a crossover of different indicators. So you got the idea that we've seen, then you got the point of control right here at this level as well. So it's bouncing there, and we'll see if it can actually hold this level of the 264s. 8 million shares traded, almost 9 million. Really catching up now with A-Ton. Will we get another down descending idea though in here under this level of the $3 whole dollar level? Two candles here to kind of get some confirmation. CJET, oh, you can't trade. Yep, I kind of figured that because they've been blocking every Chinese stock, every last one of them. But if that's where the eyes are and that's where the people are, that's where I want to be looking, even if it's blocked. Keep me from doing stupid stuff on other things. CJET crossed 10 million shares traded now. Still falling behind. For some reason, A-Ton got a little bit of more volume for some reason. Okay, so now we're getting a down in a down trend. So let's go ahead and mark that up. Idea in here. Let's see who holds up here. Gonna have to break this level and hold this 250-ish level there. Opening up right on it. Get some green here, get those buyers back in there. Back over 270. Or maybe it's just gonna fall. All right, we got some additions to the higher floats. Google popped in, Qualcomm popped in. Google is up 3%, Qualcomm behind that. Apple, and then Microsoft. So Qualcomm definitely receiving some, not Qualcomm. Google is up 3%, Tesla's up 2%. And Google and Tesla got those percentage gains for us. CJET falling to our previous idea here. So now we have a downtrend inside of a downtrend, uptrend inside of uptrend, but the previous uptrend has looking like it's failed. And like it failed. Okay. Let's go over here to NVIDIA. NVIDIA, let's see, what news does it have? It has news on Tesla. Okay. What news does Google have? Google, these stocks are moving, blah, blah, blah. It's got news on Tesla. Qualcomm. Not seeing any news on that one. Apple. Talking about Samsung and Alibaba in their news. Google has been an AI winner. Stock market, blah, blah, blah. Okay. Microsoft and Tesla. All right. Is what it is. CJET continue down. So it went down to this secondary idea, and now we're going to see if it treats this top idea as some type of resistance and form another descending level that ends up breaking down. Right now, it's just kind of consolidating here. Well, Donnell, I guess you're glad that they blocked that trade on CJET, right? Then IVP falling down through the floor as well. A-ton continue to just walk down the map slowly with 18 million shares traded. Donnell called out ENLV. ENLV. Ooh, this one, let's see what this is talking about. Over here and do our due diligence. AJ said Robinhood is allowing trades on Robinhood. Yeah, I bet they would allow trades. They're really, I guess they could be considered with their new platform and everything. They could be considered a contender for a day trading application. Sure, but POS is like actual day trading. So they're blocking it. It's probably a good reason. Let's look at ELV's profile. See what they got going up over here, and what's their look at their stats too. Invilex Therapeutics, together with its subsidiaries, operates as a clinical stage microphage reprogramming immunotherapy company in Israel. So there's another one that I avoid. Israel and China, man. They do me dirty. They do me dirty. So Israel out here. What are they trying to treat? Osteoarthritis and sepsis, organ dysfunction. All right. Nest, Zonia, Israel. Let's look at that float and outstanding shares on this one. For it to be this price, it needs to be a low float. Float is 23.19 million. That is out of my scope, a little bit too high, especially for the price. So yeah, but I'm gonna let everybody else have that one. Now it is up. Let me see, it's up. Yeah, it's up 34%. At this price, it should be up 120%. So I'm good on all that. 34%. INVP going down. CJET testing our previous idea. We'll see if it hits its head up here right at this 277. Up 43%. Needs about 6 million or 5 million shares to catch up with Aton. Aton is at 15%, so I don't expect it to continue to hold the reins here. So hitting its head right on our previous idea there. So it's just playing right in this range. This was the previous downtrend, and we'll see if it can actually hold this or if it starts to get back below this 260. That's pretty much how I do it on the higher price ones. Look at the different ideas, watch it, kind of set up these structures and kind of bone structures, and watch it try to break his arm or break a leg. Oh, Amaze just jumped up there. It's just getting 1 million shares traded, so that's not a whole lot. Only up 26% on AM at ZE. It does not have any catalyst, so CJET still leading. If it comes back below this level, continues to play this range. This is only a 30-cent range. Here are the low floats that I'm seeing right now. IVP still leading, CJET behind it, AMZE popped up, JXG, Aton, and CLSD. I don't know what CLSD is. It's 86 cents, so probably out of range. All right, so it's heading up to the next idea. Did actually get there to invalidate all of these previous things. So it's kind of invalidating this previous downtrend here. And mark this one out of there. Still got out. Whoops. Still got, yeah. Top side of this will be a break over the 3 flat. Swapping right back in there. Let's see what it wants to do here. That was a small tap, double top there. Looking for new ideas to bottom right now is 257 would be like a kind of a line in the sand. If it breaks this bottom that it's been down here too a couple of times, yeah, this definitely would not be trustworthy. Let's see if it can break down 284. If it can, this will be a new idea for a downtrend. This little spike out here. If it can break down a previous idea. Okay, so we got Google up 4%. We got Irene up 3.17%. We got the other Google up 3-something%, and then Tesla up 2%. A lot of battling going on here at the $3 flat. So we want to see a breakdown of 284. Mark this high as a new idea for a downtrend. Nine. So tap C there. Kind of decide. Okay. Not get through there. A little bit of a pop back up. Let this candle close. It needs to break down at 284. $285, $284, no break. 4. Break. Okay, so I don't trust it to put a mark up there yet. Yeah, so there's some buyers coming in at 84 holding. Yep. Can't trust it, man. Get the breakdown. Previous idea. $15 million shares traded on this one. Ooh, nice little pushback. Let's see where it wants to go from here. Is it going to break down to 20? Yeah, there we go. All right, now we got a new top side downtrend idea. Yeah. Now we got more leverage here. So now we have a downtrend inside of a downtrend. Uptrend inside of uptrend keeps getting broken. And we have pretty much a line in the sand here at 260, 20 cents away. This is what I'm seeing on my low floats right now. All of these ones that were leading are now under 20% CS. That one dove, didn't it? It was up at first, but it's down 68 something percent now. Then IVP also underperforming, still massive volume on it. 146 million shares traded during pre-market. And basically we've done our due diligence. We've stayed out of stupid trades, and we are continuing to review the market, see if anything can work towards making us some money, man. That's not blocked, not a Chinese stock. So now we're back in this range that we previously mapped out. We'll see how it does towards this bottom again. Been down here 3 times. So can it hold again at these 260s? And will the 280s become some type of resistance? 89 almost got out of the 280s. Throwing another week there. Bottom side of this is 275. refresh our news and see if we got anything here. 48 minutes. It says Lucknick says EU must change digital rules for steel tariff deal. Europe defense stocks at near 2-month low as rally ebbs. Performance Food Group, US Foods scrap merger talks. Double line where okay, we already seen that. Any other crucial Black Friday? All right, let's talk about Black Friday then. Like some new stuff has come out. We'll come back to CJET, but we got this map. The hard break for it is probably going to be this 260 level, but we got this mapped out, and we'll see how it continues to react there. Let me go ahead and jump over to the next here. We'll circle around everything while they're talking.
Into what's coming up this week. Joined by Russ Mould, Investment Director at will help us dig a bit further into what's coming up this week and much more. I'm joined by Russ Mould, Investment Director at AJ Bell. Russ, thanks so much for joining us. Well, let's start with the Fed. The probability of a Fed rate cut has now risen. I mean, last week I was talking about 30%, 33%, and now it's at 75% according to the Fed Watch tool. What do you make of what we heard from the New York president, Bank of New York president there, and also whether you do believe the markets are now right to believe that we will get a Fed rate cut next month?
Yeah, I mean, Mr. Williams is clearly being very pragmatic. We are starting to catch up on the information that we've been missing for the last couple of months owing to the US government shutdown. And although opinions remain split, it does seem as if there is some slowdown in the US jobs market. There is some cooling there. You can see that in vacancies, weekly claims, and you can see that also in the non-farm payrolls data. We'll get a lot more of that on Friday, but there's probably just enough justification in there for the Fed to at least consider cutting. And it's not just cutting this month, but if you look at the CME Fed Watch surveys that you quoted, that's pricing in at the moment, or factoring in something like 3% rates by next Christmas. So that's a full percentage point below where we are now.
Now, one of the key themes last week, and has been for a while now, is worries about an AI bubble. We saw a bounce back on Friday, but do you think those fears of an AI bubble, they're still around, aren't they?
Very, very much so. And there are more questions being raised about funding for this phenomenal amount of capital expenditure planned by the hyperscalers companies, 420 billion this year, 500 billion, then $600 billion in 2027. Will there be a return on that investment, given that I'm sure Chinese competition isn't going to sleep on that, even if there is substantial adoption? And then where do we sit with valuations? Again, when Nvidia's market capitalization reached $5 trillion, same as the GDP of Germany, that does say an awful lot of value that's being provided by the 36,000 Nvidia employees compared to 84 million Germans. And Nvidia's results were impressive, but there were some holes that you could pick in them in terms of the cash flow, inventories and receivables, and that came back to the funding issue. So that's probably going to be the biggest area of focus in the next one or two Nvidia quarterly numbers.
Now, so we've talked about the Fed, we've talked about the bubble. The next thing I really want to talk about is Black Friday, because we heard from a lot of retailers last week, kind of a mixed bag. Walmart was clearly the standout there, but what are your hopes for Black Friday?
Yeah, I mean, Home Depot popped out a stinker at the same time. So again, we're still seeing a very, very bifurcated consumer. Even if you look at the official statistics, University of Michigan surveys down at levels below that we've seen in the last 5 or 6 US recessions. The Conference Board survey isn't that bleak, but it's well off the peak of last November when the president was elected and way below the peak seen during his first term in office. So there are signs that some American consumers are feeling the strain. You're seeing that in some of the subprime areas particularly. But again, it's a very K-shaped economy, you could argue. Those at the top are doing really well. They've got assets. Those further down the pipe are feeling a lot of pressure from inflation. And we saw that politically in the November election results as well. So I think you will see a very, very mixed set of results from retailers. But at least one thing you might argue is that Black Friday is normally pretty good for a discount. So it's up to the retailers to manage that appropriately and preserve margins as well as generate cash flow.
I'm not going to get into your shopping list now, but let's look at earnings as well. We've got John Deere, their results out on Wednesday. It's fair to say sentiment amongst farmers isn't that great right now. Am I right?
No, it is, and I think the presidency has been responding to that with some of the trade deals we've seen with other countries. But equally, Deere's numbers have been reflecting that. The last set of numbers back in August weren't very strong. Analysts are predicting a double-digit percentage earnings per share decline for this quarter and for the year as a whole. I think their secret will be much more what's the company seeing going forwards in terms of backlog, and also in terms of, say, tariff impact. They'll be shaping the numbers for the coming year, when analysts do expect a 7-8% improvement in earnings per share across the year as a whole.
Mm-hmm.
Welcome to a new episode of the Opening Bid Unfiltered podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this podcast that will make you a smarter investor, no doubt about it. And you're going to get smarter on all things crypto. We're just having an interesting year and an interesting time. Joining me now is John D'Agostino, Head of Strategy at Coinbase Institutional. John, good to see you.
Good to see you, Brian. Thanks for having me.
Before we get into the world of Coinbase and crypto, how did you get here? Because you didn't actually start at Coinbase.
No, so I used to be in the rough and tumble commodities world. I was head of strategy for the New York Mercantile Exchange and helped take that exchange from 800 or so guys running around screaming and yelling with crazy hand signals. My first project actually was to help build the trading app to stop using pit cards, because back then they would use literally physical pit cards. And by the way, this isn't like 1920. This is like 2008. And they would have these pit cards, and they cost like hundreds of thousands of dollars a year in stationary costs. And my first job ever was to help oversee the coding of an app that would replace the pit cards. And I saw firsthand how angry people get when they see the beginning of their eventual, I wouldn't say replacement, but their eventual need to change. Yeah. And so it's kind of cool seeing it twice. But anyway, did that for a long time, was in the hedge fund world, traded commodities, and then I started teaching at MIT. And about 10 years ago, I wrote a paper on a very seminal moment in crypto history called the DAO hack. And in that paper, I described what I believe to be the pros and cons of blockchain, more pros than cons in my view. And I described myself in that paper as a cynical enthusiast around blockchain. And I got a phone call from a really wonderful guy who was running a big hedge fund called Polychain. And basically they reached out and said, hey, we like this idea. We don't like cynics. We don't want people who have drunk the Kool-Aid. We want cynical enthusiasts. And I learned about crypto from my position at MIT and also from just some of the best investors in the world. That led to a phone call from Coinbase, and the rest is history.
What was it like those early days at the Mercantile, watching people yell and scream? Like, what was that? Not a lot of people see that.
Yeah.
And now we're like the older guys in the room. Like,
yeah, absolutely. No, look, I was a poor kid from Brooklyn. I got into Harvard Business School, and it was supposed to be, then it was just like, all right, my life is set. I'm going to go to Goldman Sachs. I'm going to do, and I got this weird offer by an amazing, amazing icon of industry, Vinny Viola. I won a fellowship to go to business school, and he heard me speak and thank the people who gave me the fellowship. And he said, what are you going to do for a living? I said, I'm going to go work for a big investment bank. And he said, no, you're going to work for me. And I remember Dick Grasso. Remember Dick Grasso?
Yes.
Dick Grasso was sitting next to him.
OG.
And he looked at me and went, do it, kid. And I showed up at his offices versus the investment bank that Monday and took a shot. And I got to learn about exchanges and the power of price discovery. And I kind of never looked back.
How does that set you up for what you're currently doing?
Well, one thing that keeps me calm, because as crazy as crypto can get, as volatile as the asset can get, it is nothing compared to natural gas options. It is baby time frolics. So
how so?
I have this sort of almost, well, just literally the vol just doesn't move as much. I mean, I wasn't around Bitcoin in the very early days when it was up and down 90%.
They're calling for me.
But I'm used to idiosyncratic assets, and I'm used to the markets around them, the way they trade. And so the volatility doesn't, I feel very fortunate to learn about trading from the commodities guys, because they taught me at a young age that volatility is not risk. It is a component of risk, but it is not risk. And it's often used as a synonym. Standard deviation or volatility around a mean is used as a synonym for
risk. Whoa. Y'all hear that? That was pretty good. Volatility is not risk. A lot of times I see the trades that I take, I'm like, well, it's volatile. I like it. I have my risk managed inside of this volatility. Let's play the game. Volatility is not risk. That's powerful right there. Come on. Actually, I'm about to jump off here in about a couple minutes. But yeah, they're calling for me. I'd rather just go make this bag today. But we'll see how today goes. Pre-market has been quite underwhelming. Got a pop down to 262 there, and now starting to close below this previous idea. So starting to see a little bit of breakage here. Overall downtrends up here that they'll need to test back to 286 just to even try to get out of here. So I'm not sure if CJet's going to continue to be the thing. It has 17 million shares traded on it right now. $2.68. A ton continues to fall. A maze almost under 10%. So all of these stocks just not drawing on my heartstrings. British Virgin Islands, not too interested in that. So yeah, a whole bunch of death and destruction here. And you said you went ahead and traded ENVLV. Let's see how that went. ENLV, quick. I went up there, so you got 130, so that's about a 20-cent move. That's pretty good. Got about just around an hour before the open. This one started from 90 cents and is up to $1.50. It has been one of those that you really have to grab the reins and grab the bull by the horns and just hold on. And that's what is kind of where your risk can fall apart. This chop, get that stop too close and you're out. Yeah. Then moving up, I forgot when you even called this out. I think it was, I forgot what time it was, but 130. Then move up 20 cents. All right. Well, okay. Yeah, I'm continuing to get calls. All right, I'm about to jump off of here and get on down. Go make some money on the day and have more money for tomorrow for sure. Appreciate you guys for tuning in. We've done our due diligence. We've looked around. We got our high flow scanner, NVIDIA, Google, Tesla, Apple, Irene, the other Google, Qualcomm, and Microsoft leading right now. As far as the top gainers in this list, we have Google, Irene, Tesla, and then below that, everybody else is kind of regular. As far as low floats, we have IVP still with the most volume, 150 million shares. CJet behind that with 37%, 17 million shares. A-Ton, JXG, A-Maze, and CLSD. So we'll be looking. Again, we have the free Discord and all of this. This is a holiday week, so Thanksgiving is coming up. So trying to go into Thanksgiving thankful and not red. Right now, I've been sitting on green. I haven't traded in 7 days, 8 days. I don't know how many days now, but just being patient, waiting for all of this kind of this Bitcoin drop and you know how the market has been so shifty. We didn't even look at the market today. So let me go over here to the NQ real quick. Market right here has been super shifty. We thought it was going to hold this original idea up here. Did a big fall down, consolidated down here, and now it's working its way back up. It will need to break back over this level up here to 24,800s, but it is Monday morning. So we're kind of still watching the news and seeing what comes of all of this. But this is a pretty long video too. I don't know if I'm gonna watch this. It's 21 minutes. And then we have Black Friday
help
news
us
here.
dig a bit further into what's coming up this week.
Oh, we have already seen that one. Never mind. We just saw that one. All right. Well, that is it for me today. I'm going to catch you guys in the next one. I buy real estate. Now I buy dividends. I fill up the dividend bucket, man. I'm trying to get to 5,000 per month in dividends. That's what I'm doing. I'm trying to dump some money in them dividends. If I don't see nothing in the penny stocks, man, ain't going into real estate. I'm trying to wait for that bubble to pop on real estate. Housing prices coming down. As soon as it drops, go buy. Then it's time to buy some real estate. Got multiple sources of income coming in. I'm sitting here like a little grimy lizard, just waiting for the fall real estate. But anyway, that is pretty much it for me, and I'm going to go ahead and get ready to jump off of here. And as always, I will see you guys in the next one. Peace. Said houses cheap in Michigan. I bet it's cold up there, man. I'm down here in the heat, baby. It don't get. We have like 3 hot weeks down here in Mississippi. Everything else is warm. That's what I'm liking. And I guess if I just owned it and just stayed away, maybe, but I don't know. Anyway, peace. Yeah, Ben's still out here. Moving to South Carolina, nice. Yep, winter just does me wrong, man. I guess it's spending all that time running track for months in the heat, and then, you know, winter just freezes me over. Anyway, I'm getting out of here for real. Peace.